All right. Cool, cool, cool. It seems like we are now live. So yeah, awesome. Okay, so we're live. So I'm going to be refreshing, zoomed out, and then we're going to take a look at the second quarter results that just got posted. So they're saying that their cash burn was pretty darn high. Net loss of 100 million, okay, and then capex of 121 million, and cash left is 360 million. Cool. Beginning limited production in late September. So they're saying that they are still like they're still set for late September production date, SOP. Recently secured an equity purchase agreement for access to $400 million in capital. Due diligence underway with multiple strategic partners that come with a potential capital infusion, as well as pursuing external capital sources, including debt and equity-linked securities. So that was the thing that we talked about with Yorkville Advisors. Okay, so let's take a look here. Expected endurance production in 2021 will be limited to coincide with commercialization roadmap. Expected capital expenditures between 375 and 400 million, largely related to prepayments for hard tool purchases. Expected operating expenses between 95 and 105 million in selling. General administrative costs between 310 and 320 million. Research and development costs. Expected end of 3Q21 liquidity between 200. Okay, so they're saying that basically by the end of quarter or Q3, they expect to have anywhere between 225 million to 275 million in cash without any additional funds from capital raises. So as far as this, if this is it, as far as the like highlights, I don't know, I was hoping to see some more like potentially partnerships or something, but it seems like the stock is reacting quite well. You can see that we just hit $6 per share. So that's cool to see. Okay, so the stock is responding well to this report so far. I think a lot of people were betting against the fact that they were going to like maintain that position of, hey, we're going to start at September. That's still like our date, and that's what we're going for. So now let's take a look at the actual like financials. Okay, so 3 months ended June 30th. Yeah, so loss from operations says that's basically 110 million with a net loss of 108. Okay. So I don't know. Yeah, that's basically what I said, right? Basic and diluted. Cool. So yeah, their net loss exceeded like the 80 to 86 that was predicted by advisors or analysts, sorry. And that's not too surprising. As far as assets go, if we only look at cash, that's 376 million, which is still looking pretty good. It's not that big of a cash burn, but a lot of the assets went into like basically like, you know, property and plant equipment. You can see that dramatically increased since the end of 2020. You can see that increased by 180 million. So basically they're buying a lot of parts, and they said they have prepayment for tooling and parts. So what I really want to hear from this conference call, and that they really haven't talked about at all in here, is, or at least I'll look a little more into the commentary. We need to see about like the retoolment of the plant. We need to get like that forward, like, hey, this is done. And we'd also like to hear about the NHTSA like crash testing and the FMVSS validation. Just make sure that that's totally done. Sorry, some of my orders are going off. What's, sorry. Not quite sure what's going on here, but interesting. Yeah, some of my orders are going off. I was day trading Lordstown Motors and Proterra. Interesting. So yeah, they're both surging in the after hours. You can see Lordstown Motors just broke $6, and then Proterra, which I made a couple videos today about them, also an EV spec, $12.50. So I think they're both reporting earnings. I'm not entirely sure about Proterra. I think that's tomorrow, but we'll see. So yeah, Lordstown Motors stock doing very well in the after hours. Here, let's see the chat. Well, if you guys bought this morning, I mean, you're up in the after hours, right? So, I mean, we went all the way down to 543, and that's new all-time lows for the stock. And seeing that we're now rebounding pretty strongly here, I'm going to zoom out to a 6-month chart here on Webull. I'm not very familiar with this platform. But yeah, you can see that we're still below that like previous low that we set. So really we'd have to break up and over $7 to really see any kind of substantial recovery in the stock price. But the stock price isn't really what we're talking about today. Let's read more into the executive commentary. We are proud. Oh wait, that's for which one? That was for Q1. Okay, so Q2 executive commentary. In the second quarter, we continue to make great strides towards our objective of delivering a revolutionary electric pickup truck, stated Lordstown Motors executive chairwoman Angela Strand. So that's the interim CEO. This included completing retooling of several critical areas of our Lordstown facility and concluding our beta build program. Beta builds have successfully completed numerous independent third-party crash tests and are achieving the standard requirements to meet FMVSS and plan for a 5-star crash rating. A particular highlight during the quarter was Lordstown Week. During this week-long period, we proudly opened our doors and showcased our great team and technology, demonstrating the capacity and flexibility of our plant, our capable team, and in our innovative technologies. So, okay, maybe I should have read a little bit more before talking. But sounds like, okay, they said they concluded their beta build program, which is awesome. They had to build, I believe, 57 or 58 betas, and basically they were going to road test them, crash them, just do all kinds of testing, and, you know, kind of get the plant, like get a feel for the plant. So awesome to see that that program's done. That means that now they could move on to PPVs. Now PPVs, that's going to be another almost 60 vehicles that are like 98% of the final production vehicle. So basically that's going to be like the final testing, final like engineering validation. So to see that they're done with the beta program as like set to on schedule, great to hear. Now, they also said that they achieved their standard requirements for the FMVSS, which we had talked about. Darren Post had gone on the car group conference and actually confirmed this, and completed numerous independent third-party crash tests. That'd be with like the NHTSA at different testing facilities. So they've said completed numerous, which means they haven't completed all of them. So I'd like to hear more in the conference call, like seeing which crash tests are left, but seeing that they even like did very well on the side pole and on the full frontal, I mean, like, I'm sure they're going to do great, especially considering the fact that they've had very close correlation between their CAE and real life crash tests. So the fact that they said they were doing very well and expect to get a 5-star in the CAE, and in the past few crash tests that's been correlating very well with real life, I think they're going to be able to go through and actually achieve those metrics. I'm not just saying that as an eternal bull for Lordstown Motors. I'm saying that with reason. So yeah, the stock is holding up very freaking well, surprisingly. Like we hit 6, right? Pulled back, and then hit 6 again, and we're just like trading right on top of 6. So it looks like we're breaking above quite effectively $6. Now, I wouldn't say chase. The conference call isn't out. There's, you know, buying the after hours upon an earnings report. Who knows what's going to happen? But yeah, honestly, overall, at first glance, it looks pretty good. I mean, the cash burn wasn't crazy. I thought it was probably going to be considerably higher, but no, I was pleasantly surprised. And if we take a look at this is Q1 for 2021 results, you can see that they had a net loss of 125. And so for this quarter, it's 108, which is still like more than the analysts were projecting. So I'm really interested in seeing what the actual like news headlines are. And here, I'm going to pull that up right now. So there we go. This is the Thinkorswim platform like news. And you can see here, if you pull up, this is from what, Benzinga? Oh wait, no, Dow Jones. We don't really have any like strong headlines. Just say they're talking about the liquidity. They're saying 225 million to 275 million by the end of Q3. And then they're still beginning limited vehicle production in late September. And yeah, net loss per share was about 61 cents. And yeah, see, that's the headline I was talking about. Q2 EPS, it missed the 46 estimate. Now, I believe there were 2 estimates, and 46, I think that was the lower one. So, or was that the average? Maybe it was just the average. But basically, yeah, I think that was the average. So they took the average EPS estimate, and they say, hey, look, they missed by this much. Which, like, I don't, whatever. It doesn't matter. It doesn't matter. But I said this ahead of time. I'm like, hey, this is a very lowball estimate, considering that's like considerably less of a cash burn than even their Q1. So not surprising there. Then we have just that report right there. So yeah, overall, it seems like the numbers are good, and it seems like the actual just like stock response is pretty positive. You know, we're up, what, 6-7% in the after hours after being down 4% on the day. So not bad, but we did make a new low today. So here, let's see what you guys are saying in the chat. Yeah, yeah. Okay. So yeah, let's keep reading. Sorry, I kind of stopped. We are also evaluating potential strategic partners with multiple industry participants, recognizing the tremendous advantages available to them from utilizing our well-situated 6.2 million square foot manufacturing plant and 650-acre campus. The size and scope of our facility is such that we could easily accommodate additional manufacturing partners while still affording us the ability to build a successful endurance program and leverage its skateboard for additional models in the year ahead or in the years ahead. So that we've talked about this in the past on this channel. We've had a lot of like feedback in the comment section, a lot of discussion, basically saying that like they have such a massive property, and I know everybody's talking like, oh, they only paid like what, 40 million for it or something, but that's definitely not value, right? That wasn't actually the value of the plant. The replacement value is around 3 billion, which doesn't mean their total assets actually like equal 3 billion. That would be absolutely insane. But they have a massive factory. And the fact is, like, a lot of the parts in there are actually quite modern. And so, yeah, we've been saying that they could leverage this and essentially, like, allow or rent out some of the space to other manufacturing partners. Because there's so many EV startups right now, for example, so many, like, startup SPACs specifically that are trying to, like, build factories and, like, finding the land in a good area that's got, you know, like a battery manufacturing plant. They're next to, like, all the materials and the roads and the highways that they need to ship everything there. It's kind of hard to find. It's kind of expensive to build. So if they can just rent out some of it to a startup company that's willing to pay them rent every month, that's some kind of like passive income basically. So yeah, that's something we've been talking about. So it's good to see that like potentially that's what they're doing, evaluating potential strategic partners with multiple industry participants, recognizing the tremendous advantages available to them from utilizing. Okay. Oh, what the hell? And I trade a lot of SPACs, so don't make fun of me. But I just like day trading them or even swing trading. But Clover Health, for example, I don't know if any of you guys are invested in it, but it's up 10% in the after hours, cracking above $9 per share. So, I don't know, kind of interesting. But keep in mind, this is direct resistance, as yesterday we sold off from a market open around $9.20. So I would actually probably kind of sell at these levels, but that's totally up to you. I bought some shares around like $8 something, and then I sold some covered calls for 10. So that was my trading plan on that. Okay, so we're going to be waiting for that conference call. I think it's going to be a very interesting conference call. They're talking about like the retoolment of their plant, but they didn't really confirm anything here. It sounds like they're not completely done. You know, oh wait, right here. I totally missed like the most important thing. Battery line is fully commissioned, and first electric hub motor line has been site commissioned and is currently being installed. Okay, so it seems like I'm so sorry for having missed that, guys. Damn. Yeah, sorry, Ariel. Here, sad face in the chat. Ooh, I messed up the sad face too. I didn't even notice that. Okay, so battery line is fully commissioned and currently being installed. So okay, that's kind of like a long schedule. They were saying that they were basically going to get the line in the first week of July, and it would take somewhere around a month to really set it up, and then they'd have to go through like engineering validation. So it's cool that like, you know, they cleared out the whole site, they repainted everything, cleaned it up, and now they're installing that line, which has already been tested, and apparently it worked in Malaysia. Like I think they already built some hub motors there. So awesome to see that this is like actually going through. I think that was like the next critical piece that we really want to see. And we wanted to hear about that second battery line. So battery line is fully commissioned. So awesome. Production ready with retooling, stamping, assembly, body, paint shops completed. So we knew about the stamping, assembly, body, and paint shops. So it's just good to get like some kind of reminder like, hey, these are actually like complete now. Because as of Lordstown week, it seemed like there were still some updates that needed to be done. The stamping and paint shop looked totally good, but I think like assembly and body, there was still some stuff to do. So I don't know. I guess it's nothing crazy. It's nothing we didn't expect, but it's really just like they're executing. You know, like behind the scenes, I know a lot of people are kind of angry because they're not providing updates. I mean, myself included, right? This is kind of what I do. Like on YouTube, I cover Lordstown Motors, and the fact that they can't even give me like a picture to work with It's kind of disappointing, but that's okay. I would say for the future, considering the fact that they need a high stock price to have access to this $400 million in capital, because basically they have, I believe, a 36 million amount of shares that they can put out to that Yorkville Advisors. They can't, because it's only 400 million at most and 36 million shares at most. There's like that there's like a line. So basically the stock price has to be above $12 per share to be able to issue all like 36 million shares for $400 million in capital. So I think they have some interest in raising the stock price, and seeing that they're not really doing that much effort on like Twitter, Facebook, or just like showing up for interviews, because I'm sure a lot of channels would have them on. I don't know. It's like they're not really putting in that effort to raise the stock price. So it's good to see that they're still actually just like executing, following through. It's good, but I would want to see some more like PR moves to try to raise that stock price. Not for me or other people, if for shareholders. I don't give a flying crap about the stock. Honestly, like I could lose all my money in this company and I wouldn't care. I just want to see them do well. But yeah, if they raise their stock price, it'll help them get like more capital. So I'd expect some more PR moves, especially going into production this late September, which is like what, less than 2 months away now. So definitely something to keep an eye on, in my opinion. I don't know. Yeah, living a new dream. Is saying it's also in line with what they are promising. Sounds like the engineers and plant manager are talking there, not the executives. Yeah, I don't know. It seems like there's so much. I hate calling it FUD necessarily, but I always end up calling it FUD. But there's just like so much misinformation, or like we're taking information at face value, like saying, hey, we can't trust anything they've been saying. But honestly, they've kind of been going through with everything they've been saying. Really, like the big thing was that they misrepresent their orders. And then they went on later, like several months after the Hindenburg report, and even like I don't know. They kind of messed up again. They went on like the, what's it called, APA conference. It was the Automotive Press Association, and they basically talked about how they've been like confirming their orders, and then it turns out they weren't confirmed again. So like I don't even know what to say to that, but that's okay. Cameron, you have 80K. You have 80K of their stock. I don't even have $80,000, man. Damn, that's crazy. Yeah, Big Duck Cat, or Dub Big Cat, says the best advertisement is bringing the first EV work truck to market. Basically, honestly, like if they just execute, I think there's gonna be such like a story and like just shift. Everyone that's been like just tanking this stock and been like, oh, it's terrible. They'll never bring them. Like I have clips. I'll make a video later if they do succeed, like little extracts. There's so many people all across all of YouTube that are like, there's a 0% chance that they will begin a single truck like produced by late September. Like so many people are saying there's 0% chance, no way in hell. And I don't know. I mean, if they manage to do it, I think that's really going to be like massive PR. Everyone's going to be forced to make a video about it. And I'm sure there's still going to be like a bunch of bears and a bunch of people bashing like, oh, look, they built one truck. We don't even know if it works yet. That's what they'll say, but the fact is they'll still get press. So yeah, that's a great point. So now we're basically just waiting on that conference call that is 10 minutes away. It's going to be at 4:30 Eastern time or 1:30 Pacific time. Not entirely sure where I will find that. Let me find that real quick. But yeah, overall, like stock prices doing very freaking well in a lot of specs. Interesting. Okay. Yeah, I don't know. Clover Health shot up to 9. It seems that their earnings report came out pretty well. Here, let's take a look at that if you guys care. Pretty darn big loss though. A 2Q loss of 317 million. That's a bunch. Revenue of 1.4 to 1.5 for a full year of 2021. I mean, that's one thing you have to say about Clover. They bring in revenue, you know, and like the biggest thing, the most important thing for them, because they're a healthcare company, is getting new like people under their coverage. And honestly, they've been growing pretty well in that aspect. We have ambitious goals to maintain our aggressive growth trajectory, pursuing our mission to improve every life. 95,000 lives under management, is on pace to manage over $1 billion of annualized revenue. So that's the Clover Assistant. I don't know. It seems like good earnings. It says revenue growth of 140% year over year, but I'll have to like dig in a lot more, obviously. Okay, interesting. They say they're on a revenue run rate of 1.6 billion for the year. So basically, if they replicate Q2, that'll be 1.6 for the year, which isn't bad considering that like their net loss wasn't that incredibly high compared to their revenue. I mean, I don't know. Seems pretty good. It seems like they're on track. But cool to see that that's actually reflected in the stock price. So let's see. I want to see that darn webcast. Hey, do any of you guys know how to access the conference call? Ultimate Slam. Yeah. Okay. Okay, well, hold up. I cannot freaking find their conference call. Oh, there we go. Cool, cool, cool. Okay, so we're going to pull that up. That is the darn webcast. Don't look at me. I'm not going to show my freaking email on here. I don't know what you guys are up to. Okay, cool. All right. Okay, so there we go. That is the beautiful live conference call. I will be playing that in 6 minutes when they actually start talking. And then I will shut up and you guys can take out your little pens and pencils. I have mine out and I just dropped it. But there we go. That's mine. I'm ready. I'm ready. Light me up. But yeah, basically, I just want to recap real quick what I want to hear from them. And like we just got some highlights, so that's awesome. But I really want to hear about like their timeline for a lot of these things. They just said they fully commissioned their battery line, so that's awesome. But if we can get like a timeline for how fast it's going to be done installing that hub motor line, how long it's going to take to like do the engineering validation, and how many trucks they actually predict to make this quarter. Is there any update on that, or is it still like half of their initial projections of 2,200, which would put us around 1,000 vehicles for from late September to the end of the year, which sounds like a bunch of trucks. I'm not even gonna lie. If they build, for me, let's do math. If they even build 300 trucks, I will be satisfied. Because basically in 2 months, they build like, what, 60 betas? Less than 2 months? So it's not like that bad of a run rate. Well, it's pretty poor, right? It's like a beta every 2 days. But if they can even like double that and make sure that all their trucks that come out are good, I'm going to be satisfied with that personally. But if they hit 1,000 trucks, that will be a massive, massive PR move. And it'll be free is the whole thing. Like, I don't know, that'll be sick. Another thing we just want to hear is just like make sure that everything is like ready. You know, that like a lot of their cash burn has already been like done within the plant. Like we know they have most of their parts like assembly, stamping, body, and paint. All that is finished. So we'd like to hear that like their cash burn, and I know they just updated their cash burn, but like that they're sure about it. You know, because like we know they already went ahead and contracted battery cells and they bought the chips. So we just want to make sure for like analysts and like everybody that's going to be covering it that they talk about that cash burn, because they want it. I want them to reaffirm essentially that like by May of 2022, they're going to have around 50 million cash left. And then if they can talk about like some of the private investors they've been talking to, I think that's going to be important because we know that they have like that essentially credit line of 400 million if they raise their stock price. Ooh, okay, a lot in the chat. Let me read it. Oh yeah, yeah, okay. Some people are talking about like the C1000, which is like the delivery van for Workhorse. And yeah, it'd be kind of cool, honestly, if Workhorse started commissioning Lordstown to like use their plant. It'd also be like a huge like I don't know, kind of a flex on Lordstown, because so many people are like, yeah, Workhorse like pushed Steve Burns out. They were like exiled him, like kicked him to the curb because he's terrible. But then it'd be kind of a flex if like he got this plant, he put the team together, he got the truck ready, he got the factory, and then they started like paying Lordstown like money to start producing their vehicle. That'd be kind of funny. I'm not saying it'll happen, but that's kind of, you know what they were saying. They were talking to people for their massive ass factory. We are also evaluating potential strategic partners with multiple industry participants, recognizing the tremendous advantages. Okay, so let's go over the technicals real quick. The stock price movement. You can see that, bam, we're around $5.87, and I'm gonna put a level right here, imaginary level, around $5.80, because you can see that like in the past few days, if I scroll back, that like $5.80, that's like support. So staying above 580, I think is kind of a window of getting back to $7 and breaking $7. I'm going to zoom out to a 6-month chart. $7 is going to put us like kind of knocking back at a potential run up, right? Because here's $7 right here. You can see it. I guess my big ass face is in the way. But you got $7 right here. And then if you like run up to the next resistance, you got 8, and then from 8 you can easily go to 1150. So obviously a lot of things would have to go right, but that's practically, I mean, what? It is doubling from the lows that we just printed today if we get to 1150. So this stock, what I'm really trying to say is like, don't pour all your money into it and you can make a bunch of money. I'm just saying that like it's going to be incredibly volatile. You could lose all your money. I want to make all that clear. I'm not here like pumping the stock. I just think the story is so good here. Like the potential is insane. You know, it's like, okay, if they fail, you lose all your money. Cool, we get it. Bankruptcy, stock goes to 0. They file, done. Okay. But then if they succeed, how much money do you think you can make? I mean, what, a 5x? Do you think it can hit $25 again? So I don't know, from 550 today to what would be the math? 2750? If we get back to those levels, like near all-time highs, that's a 5x from here. Now, obviously, a lot of things have to go right, but basically I'm saying at the end of the day, either they succeed or they fail. And if they succeed, you can, I don't know, make a massive return on your investment. So I'm not saying put your money in. You can always wait for them to hit certain benchmarks before you put more money or any money in it. I would definitely wait for a break of $7 really before you start buying aggressively, in my opinion, from a technical standpoint. But now let's get onto that conference call, ladies and gentlemen. All right, come on. Come on. They said it was going to start at 1:30 Pacific. What's taking so long?
Ladies and gentlemen, thank you for standing by, and welcome to the Lordstown Motors second quarter 2021 earnings conference call. At this time, all participant lines are in a listen-only mode. After the speaker's
Let me know what you think of the volume.
session. To ask a question during the session, you will need to press star then one on your telephone. Please be advised that today's conference may be recorded. If you require any further assistance, please press star then zero. I would now like to hand the conference over to your host today, Carter Driscoll, Head of Capital Markets and Investor Relations. Please go ahead, sir.
Thank you, operator. Good afternoon, and thank you to all for joining Lordstown Motors' second quarter 2021 earnings conference call. To supplement today's discussion, please go to our IR website to view our press release and investor deck. Before we begin, I want to call your attention to our safe harbor provision for forward-looking statements that is posted on our website and is part of our quarterly update. The safe harbor provision identifies risk factors that may cause actual results to differ materially from the content of our forward-looking statements for the reasons that we cite in our Form 10-Q and other SEC filings, including uncertainties posed by the difficulty in predicting future outcomes. Joining us today will be Lordstown Motors Executive Chairwoman, Angela Strand, President, Rich Smith, and Interim CFO, Becky Ruth. Angela will provide a strategic update on the business, followed by Rich, who will give a more detailed update on production, and then Becky will cover the financial results, followed by Angela, who will provide our outlook and closing remarks. With that, I'd like to turn the call over to Angela Strand.
Thank you, Carter, and to everyone for joining us today. Our strengthened leadership team has been in place now for less than 2 months and has thoughtfully broadened our go-forward commercial strategy. We have identified 5 critical strategic priorities for Lordstown Motors that put us on our path to profitability. Today, our goal is to tell you as much as we can about these strategic priorities, as we believe they will unlock the value of both our physical facilities and our technologies. We will also provide you with the latest available information on the commercialization of the Endurance, on our continuing efforts to raise additional capital, and on the other initiatives that our leadership team is undertaking. I want to start by highlighting how our key assets are moving us forward. Our deep and experienced team, our tremendously large and highly flexible plant, and the breadth of technologies we've developed. First, we have become more convinced than ever about our innovation and the inherent value of our technology. Lordstown's tremendous engineering team, with its close partner Lafay, has expanded our unique hub motor design. Many of you on this call today are familiar with in-wheel hub motors, but since more and more people are now only hearing about us, I want to take a moment to explain. Our in-wheel drive puts a motor completely inside each wheel and is controlled through integrated software to make them all work together safely, powerfully, and efficiently. Rather than replicating a gas engine powertrain with inefficient transfer cases, axles, and differentials, we have a motor in each wheel and a centralized mind that controls them, providing unrivaled all-wheel drive control with exceptional performance, torque, tow, turning, and TCO. So we at Lordstown take a clean sheet approach to where the power should really come from in an electric vehicle, since we have no legacy mindset or assets tying us to the past. We believe that form should follow function and are relentless about meeting customer needs. We feel it's the way you'd build a work truck if you're starting from new. We are now redoubling our efforts to explain our hub motor technology to the market and to potential investors. We believe that the more our hub motors are proven out through continued testing, the more investors and customers will appreciate Lordstown's unique technological value proposition. Second, we are accelerating actions to unlock the full potential of our factory and our campus. Lordstown controls a 6.2 million square foot manufacturing plant on 650 acres of land in a great location in Ohio's Voltage Valley, with access to suppliers, rail, and a highly trained workforce. The plant itself was kept warm by its prior owner, and this year we have upgraded the factory such that it is completely vertically integrated with our commissioned battery and soon-to-be commissioned hub motor lines. As a result, we are now well positioned to produce our Endurance truck. But even more than that, we have seen the multiple opportunities that our manufacturing facilities and our large surrounding campus present to other companies that are seeking ready-to-go manufacturing capabilities for their products. This is a significant market. Serious discussions are now underway with several potential partners, and we expect that many more will become attracted to the potential of our factory as word of our decision to unlock its full potential spreads through the marketplace. This is a critical strategic pivot for us, a decision that we believe will lead to significant new revenue opportunities for Lordstown at the same time as production of the Endurance is ramping up in the Endurance portion of the factory. Simply put, because of our factory and our campus, Lordstown is uniquely positioned to accelerate production both for our partners and for the Endurance. Third, we have gained an even deeper understanding of the broader potential marketplace and are more convinced than ever about our ability to penetrate important opportunities in this space. We believe that Lordstown's Endurance can address both the commercial and direct-to-consumer segments in the electric pickup truck marketplace. Initially, the commercial fleet segment is one where we have every reason to believe Lordstown's Endurance can succeed in a big way. The opportunity is substantial, and it is just a subset of the overall $90 billion potential market for electric light-duty pickup trucks. And while there are already competitors, including big brands, the EV pickup market is so underserved that there is plenty of room for all. With our particular focus initially on the commercial fleet market, as well as strategically targeting delivery trucks, military vehicle programs, and technology licensing of our batteries, hub motors, and skateboard platform, we believe Lordstown has a wide and clear road forward into a lucrative and expanding EV marketplace. Fourth, our strengthened leadership team is determined to build the Endurance the right way. As everyone knows, the last months have been difficult for vehicle manufacturers generally. Shortages of semiconductors and vehicle parts of all kinds have created enormous production challenges for even the most established traditional OEMs. And we at Lordstown are not immune from these acute supply problems. Our team is adapting and will continue to adapt to these short-term challenges and to making the best decisions for our stakeholders. First and foremost is production readiness. We will be prudently ramping production to ensure a quality product and to accommodate supplier realities in the near term. We are on track to begin limited production at the end of September and complete vehicle validation and regulatory approvals in December to January. This will be followed by deployments with selected early customers in Q1 in advance of commercial deliveries in early Q2, with the ramp steepening the second half of next year. This responsible commercial plan is important for three reasons. One, to ensure that we provide our fleet customers with the time necessary to experience and then build out the required charging infrastructure for larger deployments. Two, to manage our supply chain challenges prudently, particularly as shortages and COVID impacts persist through the next few quarters. And three, to further fortify our capital position to fully support our commercial launch. Finally, our fifth strategic priority. Our experienced leadership team has embarked upon a comprehensive effort to raise the new capital that will be necessary to ensure Lordstown's ultimate success. We have already announced an equity purchase agreement for up to $400 million. The agreement was the first of what we believe will be several steps to ensure that the company has the financing it needs to succeed to profitability. We are now exploring a variety of other financing options, including non-dilutive private strategic investments and debt. We look forward to updating all of you as we reach agreements regarding these new financing options. I will now turn the call over to Rich.
Thank you, Angela, and good afternoon to everyone on the call. I am Rich Smith, President of Lordstown Motors, and I'm happy to provide an update on production, engineering, and quality. First, in terms of management changes, I want to reiterate a strong team we have always had in place in production and in engineering. Second, the Endurance betas. We have completed our beta builds, and we are using the betas for our crash, durability, and other validation tests. We have passed multiple crash tests and are achieving the standard requirements to meet FBMSS and plan for a 5-star crash rating for our vehicle. As someone who has over 30 years experience building cars and trucks at many different plants and for many different OEMs around the world, I say that to be this far advanced in crash tests in the first pass using the beta vehicle is unique and a testimony to the team's innovative use of CAE and design innovation speed and our vehicle technologies. Third, we continue to refine the components for cost and quality and production validation and pre-production vehicles. We are launching a mix of soft and hard tools to protect these improvements. Once complete, we will lock in with hard tools, which are production equipment needed to build trucks at mass scale cost efficiently. We will use pre-production vehicles for NHTSA crash testing and validation once the final steps before we go to commercial production. Recall that PPVs will have a production process with battery and hub motors built in-house, as well as paint, subassembly, and frames all completed here in our plant. We are retooling the plant to be flexible to ensure build multiple vehicle platforms inexpensively from trucks to cars. We have made substantial progress on this since last May when we last spoke. The stamping, body, and paint shop reconditionings are all complete. General assembly is also on track for September production readiness, and we have installed a new chassis marriage line. With the flexibility considered up front in our retooling, our current footprint utilizes about 30% of the plant's 6.2 million square foot, so we have ample room for potential partners to build vehicles, for us to build vehicles for others, and for additional LMC vehicle platforms, as well as other opportunities, such as selling batteries, hub motors, and our complete skateboards to other companies. Shifting focus to propulsion. We started installing the first electric hub motor line on site, and it is currently undergoing site commissioning in advance of limited production builds. The first battery pack module and pack assembly line are now fully commissioned. Finally, we continue to develop and refine our hub motors. We want to develop multiple motor sizes and different platforms and use cases, and broaden this involves increased torque, towing capacity, and energy efficiencies. Improvements to the motors were developed in-house in conjunction with our partners at Laffey. We believe the performance improvements should open up our opportunities set within the commercial space. Our innovative technologies are leverageable in many different ways for Lordstown, including to power our unique truck skateboard and to expand our use of our revolutionary hub motor across many vehicle applications. Because of our technology, we have no doubt that we will be at the center of the discussion as fleet customers and consumers look at electric pickup differently. And with that, I will hand over to Becky to take you through the financial results. Thank you.
Thank you, Rich. Good afternoon, and I also want to thank everyone for joining today's call. I am Becky Roof, Interim Chief Financial Officer, and I will review our second quarter 2021 results and mention other items as well. But before I do that, let me note some of the actions I am taking to both bolster our team and address our auditors' concerns. First, we are adding several experienced financial personnel in accounting, treasury, and controller functions. Second, we are implementing additional financial software tools to enhance our reporting and control processes that will also support our SOX compliance testing that will be taking place over the balance of the year. Our financials are presented in accordance with GAAP. In the second quarter of 2021, we recorded a net operating loss of $108.2 million versus $125.2 million in Q1. Our expenses consisted of $33.8 million in SG&A versus $14.4 million in Q1, or an increase of $19.4 million. Our R&D expenses were $76.5 million compared to $91.8 million in Q1, or a decrease of $15.3 million. Included in the Q2 amounts is $3.9 million of stock compensation expense. The quarter-over-quarter increase in SG&A expenses is principally driven by higher legal, consulting, and payroll expenses. Our legal expenses were $9 million higher in Q2 than in Q1, largely due to the special committee and SEC investigations. Consulting fees were $6.2 million higher, largely due for the same reasons, and vehicle development expenses. We believe that much of the increase in legal and consulting expenses is non-recurring in nature. For Q2, we believe that as much as $13 million is non-recurring. Payroll expenses were $2.8 million higher as a result of adding team members as we head to limited production. The quarter-over-quarter decrease in R&D expenses was driven principally by lower prototype components expense of $28.9 million, related to the completion of purchases for our betas and a decline in purchases of pre-production vehicle components, as many of those purchases were made in prior quarters. We also experienced lower supplier services fees in the amount of $1.4 million. These reductions were offset by higher total payroll costs of $7.3 million for increased headcount as we ramp up our manufacturing teams, and also by increased operating expenses, including utilities, building maintenance and supplies, and shipping, totaling $4.8 million. We anticipate that quarter over quarter, R&D expense should continue to trend downwards over time as our external service activities in vehicle development are concluded. Turning to the balance sheet, we ended the second quarter of 2021 with a total cash position of $367 million. We have total assets of $687 million, largely consisting of our cash position plus $286 million in PP&E and construction in progress. On the liabilities and equity side, we have $88 million in total liabilities, mainly accounts payable and accrued expenses, and $599 million in shareholders' equity. From a cash flow perspective, we used $98.8 million in cash from operations, used $121.3 million in investing activities from purchases of capital assets, and generated $0.05 million from financing activities. Our combined cash used in operations and investments was $220.1 million. We ended the quarter with approximately 177 million shares outstanding. If all outstanding warrants were converted today, we would have approximately 180 million diluted shares outstanding, not counting employee stock options. As Angela mentioned, we are pleased to have recently announced an equity line of credit with a notional amount of $400 million. This gives us the flexibility to raise capital quickly and at our discretion. We recognize there is dilution from utilizing this instrument, and we want to balance our future capital needs using less dilutive instruments. We are in discussions with multiple parties in exploring access to other types of capital, including public instruments such as debt, strategic partnerships, and we are continuing our discussions with the Department of Energy Loan Program Office regarding our obtaining an ATVM, or Advanced Technologies Vehicle Manufacturing Loan. Angela mentioned unlocking our value. We have a large and strategically located campus, the plant of the past making vehicles of the future. We are reporting a book value for our land, buildings, machinery, and equipment, and vehicles in an amount of $45.5 million. We have invested an additional $240.1 million in construction in progress assets as we continue our plant readiness preparation. We believe that when coupled with billions of dollars that the former owner invested before Lordstown Motors acquired the facility, that the fair market value far exceeds what we are reporting on a GAAP basis. We are in the process of engaging third-party appraisers to opine on this valuation. Finally, and in connection with the delivery and placement into commercial service of our zero-emission vehicles, or ZEVs, under various federal and state rules and standards, we will earn tradable credits that can be sold to other OEMs. We intend to take advantage of these regulatory frameworks by registering and selling these credits. In addition, we have entered into an emissions credit agreement with GM, pursuant to which, and subject to the terms of which, during the first 3 annual production model years, wherein we produced vehicles at least 10 months out of the production model year, GM will have the option to purchase such emission credits at a purchase price equal to 75% of the fair market value of such credits. Please see our 10-KA for a detailed description of additional terms related to these ZEV credits. Thank you, and I now turn the call back over to Angela, who will provide our outlook and closing remarks and guidance.
Thank you, Becky. As we made everyone aware during Lordstown Week, we are committed to our values of teamwork, technology, and transparency. Now on to guidance. As we have already indicated, our expenses have exceeded prior management's expectations for the reasons laid out earlier, and the pace of our commercial production ramp will depend on multiple factors. We are updating the outlook for full year 2021 that was provided last quarter. First, we have chosen to build a limited number of early production vehicles in the fourth quarter for validation and regulatory clearance, as well as gaining real-world experience with customer pilots and demonstrations. This prudence will allow us to mitigate supply chain ramp-up risk and expense and achieve more favorable cost of goods targets prior to moving into commercial production and launching Q2. Second, for full-year guidance, we expect between $375 and $400 million in capital expenditures, up from $250 to $275 million, largely due to prepayments for hard tool purchases. On the operating front, we now forecast $95 to $105 million in SG&A, up from $55 to $60 million, of which $8 million is stock compensation expense, $310 to $320 million in R&D, up from $280 to $290 million, of which $12 million is stock compensation expense. Third, for our liquidity position, we expect our cash at the end of the third quarter to be in a range of $225 to $275 million before giving effect to any financing. As noted above, the equity line gives us flexibility to access capital and will do so as needed, while we also continue to explore other financing and strategic options. We remain in discussions for multiple strategic and financing opportunities. In addition, we also remain in due diligence for an application for an ATVM loan, and we continue to seek and pursue opportunities for other tax credits and grants across multiple jurisdictions. We want to thank all of our talented employees for their hard work and dedication across our offices in Lordstown, Ohio, Farmington Hills, Michigan, and Irvine, California. We are proud to be part of the Voltage Valley Renaissance in Ohio, creating good jobs that help address climate change and sustainability issues. In summary, our mission to bring to market the first full-sized all-electric pickup truck is reinforced by our 5 strategic priorities stated previously: our technology, our plant, our commercialization plan, our production capabilities, and importantly, our team. We see numerous paths to unlock the value of our business with additional vehicle platforms, contract manufacturing opportunities, and multiple and diverse revenue streams. Lordstown is a company with heart that is building a real truck with real people in a real plant, and our future is very bright. Thank you for your time, and we very much look forward to talking with you again in November.
Operator, we will now take questions.
Thank you. As a reminder, to ask a question, you will need to press star then 1 on your telephone. To withdraw your question, please press the pound key. Please stand by while we compile the Q&A roster. Our first question comes from the line of John Murphy with Bank of America. Your line is now open.
Good afternoon, everyone. This is Aileen Smith on for John. First question on the increase to the CapEx outlook for this year. When we compare it to the outlook that was provided a few months ago, is it fair to interpret the 1Q outlook as perhaps encompassing a more conservative budget as the team was focused on maintaining appropriate liquidity levels, and therefore this new outlook reflects what would have been in your internal expectations now that you've lined up incremental capital with the equity purchase agreement? Or is there something more operational in the CapEx outlook that reflects a significantly higher level of spending than what you assumed a few months ago?
Thanks, Aileen. Appreciate the question. Yeah, I think you're on the right track in terms of this. The ordering of the hard tools and the prepayments were along the lines of the budget before, the increased expenses. So we're really back to what the plan was in the first quarter.
Okay, got it. And then I wanted to dig in a little bit into the strategy with the strategic partners that you referenced a couple times and get a little clarification. Is that more of an effort by Lordstown to get into contract manufacturing, or rather opening up the significant capacity within the facilities for your partners to use as they see fit? And is either offering more or less ideal for Lordstown, and how do you think about the economics of working with those partners?
Thanks for the question. We are exploring multiple partnership constructs. That includes contract manufacturing, that includes licensing, in addition to producing our own vehicles. And so, of course, you understand I can't disclose partnerships that are in discussions, but broadly we're discussing with multiple OEMs who are interested in exploring how they can leverage the assets that we have today.
Okay, understood. And then a final one, if I may, in some of the recent management changes and resignations. Can you talk about some of the customer or partner feedback you've received with the C-suite development? And in terms of the search process for a new CEO and CFO, do you have a thought process on some of the priorities on candidates that you want to bring into the company, meaning those with more automotive experience or technology experience?
Thank you for the question. I'll take the second part first. So we are in an active recruitment process for our CEO and CFO, and that process is proceeding. And there are a diverse range of candidates that we're evaluating and that are evaluating us at the present time. The second, as to the customer and stakeholder response to the new expanded leadership team, as you know, we hosted more than 450 people during Lordstown Week, and that was a very diverse range of investors, policymakers, customers, and suppliers. And the response has been extremely positive. And we've really been able to accelerate our momentum, and specifically now that they understand that we're committed to the long-term viability of the company, and also really to unlocking the full value, not just for the Endurance, but also for the other assets that we have at our disposal.
Okay, great. That's very helpful. Thanks for taking the questions.
Appreciate it. Thank you.
Thank you.
Thank you. Our next question comes from the line of Emmanuel Rosner with Deutsche Bank. Your line is now open.
Hi, good afternoon, everybody.
How you doing, Emmanuel?
Hi. Doing well, thanks. So it's encouraging to hear about upcoming limited production in the fourth quarter, both for validation and also for customer pilots. Can you talk about which customers will be piloting some of these early models, and then any updates you're able to provide on shape of demand beyond that when you start actual productions and deliveries? I don't know if it's in terms of order book, have you started taking some deposits, just anything that helps us in terms of how to think about it once you start delivering your vehicles.
Sure, thanks for the question. It was nice to meet you, by the way, at Lordstown Week. In terms of the customers, and I'm sure you understand, we're not disclosing the specific list of customers, but the contours, in addition to Holman ARI, who we've already disclosed, we have a vehicle purchase agreement with. We'll be working with fleet management companies and understanding that they're important because they also serve their own fleets, as well as fleet customers directly. And we're hitting all of the major segments: telecom, utility, construction, as well as municipal. And we'll be working with across those segments in the first quarter as we move to commercial ramp in the second quarter. Perhaps for the second part of the question, I'll ask Carter to comment.
Yeah, thanks, Manuel. What we've always felt comfortable with is that we build a truck that is the quality product and it meets the specs that our customers demand and at a price point that's attractive. We're never really concerned with demand. We feel very comfortable that demand will most likely outstrip our production capabilities for the first couple of years. We're hesitant to put a number around it, as you know, because of the way that we have discussed our order book in the past. We'll get a lot more feedback as we give some of those customer demonstrations and trials, and we expect to continue to pursue expanded vehicle purchase agreements as that process unfolds.
That's fair. So I guess just if you can give us a sense of where you are in that process. Have you already started taking some firm orders, or the ones that require deposits, or is that something that would be coming later on?
Yeah, we're still in terms of the time frame. We're very cautious. We don't have a product, right? So we've always said until we have a product available, we can't meet rev recognition terms. So their vehicle purchase agreements we continue to pursue do include, some form of deposits. Each of them are different, so these are all each unique. But as we get closer to these demonstrations, we will, we'll have more forthcoming description of what those purchase agreements look like. But they generally follow the form of what we've talked about in the past.
Understood. And then second question, I guess in the last quarterly updates, I think part of the updates revolve around supply chain constraints and the ability to sort of get access to some of the parts that you needed, which prompted in turn some insourcing of some of those parts. Can you just update us on what you're seeing in terms of supply chain? Have you essentially been in the process of insourcing all that you needed? Are there any additional constraints coming up, or are things looking actually pretty stable, going into your early production?
I have Rich answer that.
Thank you for the question, Manuel. Basically, there's not really any difference in the supply chain from last quarter to this quarter. We are insourcing some of the major components that or some of the potential risk last time. As we discussed last time, we have brought the frame in-house. Part of that is to give us flexibility on multiple platforms, which allows us to build the technology of our skateboard, which with the flexibility of building the frame, the hub motor, and the battery, gives us multiple platforms, and we can really build off of that platform to multiple vehicle platforms other than just the endurance truck if we need to.
Understood. Thank you very much.
Thanks, Manuel.
Thank you. Our next question comes from the line of Joseph Spak with RBC Capital Markets. Your line is now open.
Thank you. Good afternoon, everyone. So you just guided second half OpEx a little bit under $200 million. Even if we just split that, so $100 million, we look at your cash balance, that takes you down to, call it 265. So to get to your third quarter liquidity target, it makes it seem like there's a really big decline in the CapEx next quarter. Can you help us with the cadence of OpEx and CapEx so we can, calibrate here?
Sure, I'll ask Becky to answer that question.
Thank you, Angela, and thank you, Joseph, for asking the question. So we made very significant CapEx expenditures in Q2 when compared to Q1. It was 121.3 in Q2 and 54.3 in Q1. So the biggest change in our CapEx outlook for the balance of the year is the prepayments on hard tooling that we'll make either late third quarter, fourth quarter, and those were not contemplated when we provided guidance earlier this year. With regards to liquidity, at the end of Q3, cash forecasting is always as much of an art as it is a science, and we have levers to pull when we make large cash outlays, like the one that I just described. We have flexibility in when we make those prepayments for our hard tooling. So we'll make these kinds of decisions when we see how market conditions are and what kind of strategic and financial partnership discussions, how those are progressing. We do have the equity line of credit that we just put in place, and we have not yet utilized that line.
Okay. Maybe that's a good segue into the follow-up. So last quarter, you said you thought you were gonna end the year, $50 to $75 million. Now you raise spending, but you do have the ELOC. What are you targeting for end of year, or maybe put differently, like how much do you plan to draw on the ELOC for the year?
So thanks for the follow-up. As I just said, we put the ELF in place to create a lot of flexibility for ourselves, and so as our other strategic and financial discussions progress, and as Angela mentioned, we're in discussions with multiple parties on both fronts. As we see how those come together, coupled with the availability under the ELF line, we'll make the decisions about how we spend our CapEx.
Okay, but there's no cash level, end of year cash level you're targeting as of today.
No, because Joe, just let me, think about just the different levers that Becky was talking about. So, we've made the commitment to hard tools because it's, incredibly important for us to get to, vehicle profitability, and they have long lead time components, as you know. So, we're going to make the appropriate strategic partnership decisions and financial decisions to make sure that we have sufficient cash to execute on our plan. But those are still, there's 3 or 4 different moving parts, and we'll have a better sense over, say, the next 2 months as to where we would be. It's a little premature for us to give you a year-end cash figure, but we're very conscious of where we stand today, and we have a lot of optionality is what we're trying to say. We will update you appropriately in the coming weeks.
Okay. One more. Like you mentioned strategic partners and the optionality there from, either building vehicles for others, or it sounds like maybe even subleasing space. But it's interesting you're calling it strategic partnerships or strategic partners now. I think last quarter and in prior conversations, it was called strategic investment or strategic capital. So is that also still an option? Is that off the table, or is the financing more likely to come from financial capital raises as opposed to strategic raises, and then the partnership conversations are really more about how they can potentially utilize your assets?
So it's a great question, and the answer is it's both. And so when we talk about strategic partnerships, they can also come with investment as well as financial investors. So I think your interpretation is accurate.
Okay. Thank you very much.
I would separate them, Joe, into 2 buckets, right? There are multiple different financial options and multiple different strategic options, and some of those come with financial investments.
Okay. Thank you.
Certainly.
Thank you. As a reminder, to ask a question, you will need to press star then 1 on your telephone. Our next question comes from the line of John Lopez with Vertical Group. Your line is now open.
Hi, thanks very much. I apologize. I just wanted to come back to portions of the prior topic and just maybe try and ask it this way. It seems like, based on the cash guidance, your combined OpEx plus CapEx has to drop to like sub $150 million in Q3, but then increase to above $250 in Q4. Is that like directionally right?
I'll ask Becky to answer that.
So I don't think I provided any difference between Q3 and Q4. And again, reiterating that we have a lot of flexibility around when we make our large disbursements, and that's not just CapEx disbursements, but that's also for expenditures that are currently classified as R&D and will stay R&D until we go into production. So that's how I would answer your question, is just the optionality that we very carefully put in place.
And think about when the timing of it, John, right? Some of them straddle 3Q, 4Q, so some could bleed one to the other. So it's kind of tough to delineate when it could stretch from end of September and early October. So it kind of gets, we put it in that second half bucket without trying to parse it too finely into the third quarter. You have our range of the third quarter, and there's some movement there, but we have the optionality to be able to move it. And part of this is also, our anticipation of the types of financing we're going to get.
I see. Okay, that helps. Sorry, I had two other quick ones if I could. Well, hopefully they're quick. But secondly, it sounds like the messaging now is commercial production is shifted to the calendar second quarter of 2022. So could you just, if I'm interpreting that incorrectly, please correct me. But then I suppose my question underlying that is a lot of the prior management's focus was on sort of like being early, being first. And to the extent that you push commercial production there, you're now sort of layering on top of a large competitor's timing. So how do we think about that? Does that influence your view of the initial opportunity, the longer term opportunity? Maybe just talk to those dynamics for a second, if you could.
Of course, it's a great question.
Thank you. So the distinction I'll make with, you're correct that commercial production and commercial production ramp begins Q2. However, the vehicles that we'll be deploying with a limited number of customers in Q1 are production quality vehicles. And the distinction that I'll make there is we still plan to be first to market, particularly in the commercial fleet space. And what we've heard from fleet customers and fleet management companies is that based on the performance of the vehicle, the configurations, the options, the performance, and the TCO, we'll be really well positioned to establish a leading market share. And as I mentioned in our prepared remarks, it's a very, very large and underserved market, and there's room for multiple players.
Gotcha, understood. Sorry, my very last one here is I just want to talk about Hub Motors for a quick second, which you guys seem to be highlighting maybe a bit more. And I think I heard you guys referencing potentially some licensing opportunities there. And I suppose my question is this, is I guess our understanding is that you're licensing the core technology itself from LFE, which you've referenced a few times, but then you're also paying Workhorse for some past development there of one sort or another. So sorry, the question here is, to the extent you were going to license something, like what exactly is yours to license?
Thanks for the question. So you are correct in that we have a licensing partnership with Alafe, and we are continuing to work with Alafe as we develop expanded and unique configurations and applications, not only for the Hub, but the Hub integrated into our skateboard. And so there are multiple levers that we're pulling there as different customers and partners are interested in different configurations.
Okay, understood. Thank you very much for the thoughts.
Thanks, John.
You're welcome.
Thank you. There are no further questions. I will now turn the call over to Angela Strand for closing remarks.
Thank you again, everyone. On behalf of our team at Lordstown Motors, we appreciate your time, all of your support today, and we look forward to speaking with you again in November.
Ladies and gentlemen, this concludes today's conference call. Thank you for your participation. You may now disconnect.
Well. I don't know. I think overall it was pretty good. I feel like it was pretty boring. It was a lot more straightforward than when Steve Burns was on the call. I mean, the last one lasted a really long time. This conference call was considerably faster. So, I mean, at least they got to the point a little bit more, but they didn't talk too much, like, about certain intricacies about the companies, and they didn't really talk about, like, certain numbers I would have liked to see highlighted. I mean, they've said in, like, a conference that by May, they expected to have about 50 million, but they didn't really reaffirm that, and they didn't say that they were going to have 1,000 vehicles built by this year. They said they were going to start limited production, which perhaps that's them kind of, like, covering their ass and like preventing them from like at the end of the year people are like, where are the 1,000? And then they're like, well, we didn't say that. So maybe that's what that is. But it really seemed that they were kind of vague on a lot of things. So it seems like they understand like the hot water that they're in, and they just kind of don't want to like put anything too concrete. They really just want to like execute behind the scenes, kind of like if somebody's just like making fun of you all the time, you just kind of like keep your head down, work, prove them wrong, right? It's kind of that concept. I feel like they understand that they're the underdog. So many people are going to try to twist everything they say. So I feel like they're just kind of trying to keep their head down and just execute like we've seen this quarter, right? They kind of did everything they said they did. They talked about Lordstown week. They went through with that. They were talking about retoolment of the plants. They were talking about the hub motor line coming over and having that installed. So now it's here. It's site commissioned and it's currently being installed. So all the things that they're saying are actually happening, and seeing that they have revised upwards their cash expenditures and that they managed to stay close to it despite all the testing and beta builds this quarter, I think it's good. With a capex of 121 million, it's not like anything absolutely crazy. The analysts did undershoot it like I had talked about, but that's not surprising at all. So overall, let's see. What are your guys' thoughts? The last questions were very good. I like how the Lopez guy got thorough on his questions. Yeah, I liked some of the questions, like asking what they had to license, for example, when they talked about the hub motors, but I think the answer was really vague. I'm going to have to go back and just like pick everything apart, make recordings and like talk over it, but it seemed like quite vague in a lot of ways, and basically it just talked about like different hub motor configurations, which I don't really know what that means. I don't know if that just means like perhaps different forms of like drive, whether it's like front wheel drive, rear wheel, I don't really know what they're talking about. But as far as like also partnerships and orders, they sounded really vague on that, right? They talked about like potential more like private investors coming in or like strategic partnerships, and they didn't really name any names, but they did say they were talking to like major OEMs that were potentially going to like license parts of their factory and kind of basically pay them rent, or maybe even like an upfront payment, I don't know, for part of their factory to allow them to have like operations there. So that'd be kind of cool. I think somebody in the chat was talking about Nissan. I think Nissan was like involved in a thing before, and then that got canceled. So it's a possibility. Will GM come back into the plant? I don't think so. GM's actually been closing like a decent amount of factories, so I'd be surprised if they started like paying LMC. However, if Workhorse does, I wouldn't be too surprised, as one of their problems is really production. They haven't been able to scale up production nearly enough to like match their order books. So to answer, I guess, that statement, Brett Annis, what you're saying about like no commercial production in 2021, that's not what they said, right? They didn't put a number to it. They didn't say, hey, 1,000, but they said we're still totally on target to complete or like have that start as production, limited production in late September. So reaffirming that less than 2 months before it happened, saying that they still have enough cash to get them through to that point, that now they have a credit line, and that like most of their factory is retooled. Their testing has been going well. Their FMVSS, like that passed, they met the requirements, and they've done very well on completed numerous independent third-party crash tests for NHTSA or NHTSA. It's like at face value, everything seems so good, right? What did they really need? What do they need? They needed more funding. Okay, cool. They got a credit line. Okay, they needed to retool their plant. Okay, nearly done. Literally waiting to finish installing the hub motor line. Okay, they needed to do testing and validation. Okay, well, they've completed numerous third-party crash tests for NHTSA. Okay, they passed their FMVSS plan, and they're still on target for a 5-star crash rating. So all of these things that we were expecting from them, they've been doing, right? They've been executing. I think mostly when we're talking about like, oh, they're not going to do this thing. Look, they're not talking about the numbers. It's like we're almost nitpicking, and I think it comes from fear or like mistrust. And totally right to have that, right? They misrepresented their order book. Potentially when your back is like potentially to bankruptcy, I mean, you have to pull some strings. You have to like work your ass off. You got to do some things. So overall, I think they're really just executing. They're doing what they're saying, but I understand where the mistrust comes from. And it makes sense. You know, you shouldn't just like listen to every single thing they say and not even question it. That wouldn't make sense. So vehicles will be produced but are on hold until validation. That, yes, indeed. They said that basically they were going to be doing start production late September, and then they will start deliveries at the end of December, which is good, very good in my opinion. Even if they had done all their testing, like crash testing and FMVSS validation, like months and months ago, I would still want them to do this, because a problem for a lot of like not just startups but companies are recalls, right? You don't want to have like vehicles out in customers' hands before you've like built quite a few, you understand how your production lines, and maybe even find some flaws. We've seen like every company ever have serious recalls. GM just had like what, 100,000 Chevy Bolts or something, like a crazy amount. So I personally think that a lot of people are going to rat on Lordstown Motors for holding onto their vehicles for a few months, but I think that's a great move because they really can't afford like major recalls, right? That would be devastating to their cash balance. How fast do the trucks go? So that's something I want to address because there's an 80 mile per hour cap, right? We talk about that a lot. However, again, the 80 mile per hour cap, if you go on their endurance page on their website, you can see right here, it says the top speed is 80 miles per hour. Now it says software governed. And basically they're saying that, hey, this is a software governed, like, basically just like a cap on both the acceleration and the top speed that is modular, so you can put it up, you can put it down, you can take it off. And that basically means that for fleets especially, it would allow them to like have variable insurance costs, because if your vehicle, for example, can only go 45 miles per hour, it's a lot harder to have some fatal crashes and cost your insurance a buttload of money. So that's why they have that like software governed top speed. As far as like the top speed, I believe it's been tested up to 120 miles per hour on a track owned by Nissan or Toyota. I have a clip of it, but yeah, that's the idea. So basically, just like quick little recap on the stock after hours. You can see today we were down 4.3%, and we went up as much as 8.8% in the after hours from where we closed, and we're about up 5% currently. So the stock responded quite well to this earnings report. That's the software governed thing. As far as the load capacity goes, we don't really have that right here, but I think it's like curb weight and then the actual weight of the vehicle. It seems like it's on par from the calculations I've seen online, and I'll do a video strictly talking about that. But it seems like it's at least on par with the F-150 Lightning, if not better. I think the payload capacity is actually better than the F-150 Lightning. Okay, so basically, I'm gonna just recap real quick because I think there's like a lot of things that they talked about. They were pretty vague, but there's still like, you know, a decent amount of information. It seems like they basically have 400 million in cash, 366, and now they have a credit line. They are almost done with the retooling of their plant. They have to install and then validate their hub motor line, which has already been tested in Malaysia. They now are talking to like multiple potentially private investors and are looking for some kind of like strategic partnerships. Everything's like they completed their beta program, they passed their FMVSS requirements and numerous independent third-party crash tests. So their testing, it seems like that's going actually very well, correlating very well with their CAE. Just everything seems like it's really just kind of falling into place, right? And that's my opinion. We'll have to see what happens next quarter or some next few updates. The next really big update I want to hear about is that hub motor line and the ATVM loan. They kind of scratched on it. They said they're still in the due diligence phase for the ATVM program, so they haven't been denied, they haven't been accepted. Keep in mind that's still up in the air. I believe it was for $200 or $300 million for retooling of their plant, so that could come really in handy. And I mean, it'd be incredibly helpful. So if they get that ATVM loan, the fact that they haven't even shut them down at this point, I think is a good move. But that credit line, I think, really helps them towards getting that ATVM loan. And if they can announce another form of potentially funding or another strategic investor, like buying shares or something, I think that'd be great, you know, because that would really just back them in getting the ATVM loan. So as far as the risks go, let's talk about the risks, because it's great to talk about what's all good and peachy about the company, but the real risks are potentially bankruptcy, right? This company could go bankrupt. That's totally a risk. Having like a startup, an OEM, most of these SPACs that have been going public, they're going to go bankrupt, right? Most of these companies have actually gone bankrupt in the past. Like Faraday Future, for example, they literally started up like early 2010 something, and then they went bankrupt, and now they're back because like there's a lot of money being thrown around in the market. So saying that they can't go bankrupt because they still have a lot of cash, that's incorrect. They could totally go bankrupt as they follow their ventures. That's totally a fear. That's totally a risk. Next, they are being investigated still by the SEC and the DOJ. However, I think with like the SEC filings they've been filing and like really giving to the public as far as like the SPAC structure before they struck that deal, just like it seems like most of the information is actually public knowledge, and I've been combing through a lot of the SEC filings, and honestly, everything, obviously, I don't know anything, I'm not a financial advisor, but it seems like everything is kind of like close to what they've been saying. Obviously, the pre-orders is the big thing, so I wouldn't be surprised, in my opinion, if they slap a fine on either Steve Burns or Lordstown Motors, pay some lawyer fees, etc., which kind of hurts, right? They said 13 million, I believe, in like lawyer fees and all that, is what they did this quarter. So yeah, it'll hurt, don't get me wrong, and depending on their funding, it could hurt a lot or it could be kind of a scratch. So that's something to keep an eye on. We really want to hear about that NHTSA like validation and crash testing. Get that out of the way. Hub motor line, get that out of the way. And then just like finish complete retoolment. And then we want to hear about the PPVs because the pre-production vehicles, that's really something we want to keep an eye on, as that's going to be a great indicator as to how their real production vehicles are going to perform. So that's my take. Yeah, true. You can't go bankrupt without having any debt. That's correct. However, like you would be paying taxes and fees on like both your property. You'd have to pay your employees and all that. So like eventually, even if you stopped all like cash expenditures, you would still have to spend some money, and you'd eventually go bankrupt if you stay stagnant. So to make money, you'll have to spend money, and if they spend too much money, they're dead. So yeah. 15 million non-recurring. I'm going to make a video on Fisker because I think Fisker is like has every problem that Lordstown Motors has been like bashed upon, but nobody's talked about them. Literally in the same articles that like Lordstown Motors are bashed by like a bank, for example, Bank of America, Fisker is like promoted in the same article. And it's like, what? Fisker's trying to build a vehicle, I think for $40,000, the Fisker Ocean, the SUV, in 2023. They don't even have their own factory. We'll have to see how that goes. I'll make a video on that, but like, I don't know. Oh, I guess the biggest one they even talk about, and they didn't mention at all, is their search for a new CEO or CFO. As far as CFO goes, I don't know. I mean, like Becky Roof, they've been like revising upwards the management expectations for cash burn. So it seems like she probably knows what she's doing. She has like a lot of history and like experience. So, I mean, she knows what she's doing as a chief financial officer. And as far as like Angela Strand, I've heard a lot of people saying that like that's not the best idea. But I don't know. I mean, she works on the board of like Nuvei, which is like the not just vehicle to grid, but also like charging infrastructure and stuff. So she has like a lot of experience with electric, like automotive in that space. And it seems like so far, I don't know, the leadership has been good and they've been executing. So seeing them like streamline that business plan, getting rid of the van and like that partnership with Camping World because of the RV, I like that. That's going to like cut down on their operating costs or like their R&D. So far, it seems like it's good. I'm not trying to spread negative sentiment about like the cash. I don't know if that was directed to me. Okay, so yes, they have cash. They have 360 million, but looking at like their capex, they can't run more than like a year based on that balance if they keep burning as much as they do, right? Especially if they start like heading into full scale production. Yes, that'll bring them revenue and everything, but like it'll only do so much. So they can't last that much longer if they don't start like producing a decent amount of vehicles. And that's really what we have to bring up. The point is they need funding, right? They've even said that. And yes, they have that credit line of $400 million from Yorkville Advisors. But again, that is based on the stock price. You can't get 400 million just strictly by diluting the crap out of shareholders, which again, it won't be that much. It'll be, I believe, 20% because it's 36 million shares and there's already 178. And most of the warrants are already like, I don't know, redeemed, a few million left. But basically, I don't know, the market cap is what, below 1 billion now? We're literally below $1 billion of worth of market cap, and we have to be above $12 per share to actually get that for full 400 million. So either we dilute a bunch and don't get that much cash, maybe like what? I don't even know. I'm not going to do the math, whatever, doesn't matter. Basically, like, we can't get more than 200 million at our current price point. So to get the full 400 million, we'd need to actually get, which honestly, like, it's a decent amount of cash too, but we'd have to raise the stock price to really get that full value. So yes, 400 million from Yorkville Advisors, great credit line, very useful. It's awesome, especially for like ATVM loan credibility. But again, they need funding. They need to get it from somewhere. And I think looking at like how cheap this company is on a basis like of less than $1 billion, considering their assets, which I'll talk about in a second, I mean, from an outside perspective, if you're like a private investor and you're managing a lot of money, maybe now is a good time. If you're like talking to them, you look at their vehicles, the crash testing, their financials, everything. If you really look at them and have like an inside perspective or insider knowledge, I think you could potentially make a great investment if you're like the manager of a hedge fund or something. So I think like seeing another cash infusion wouldn't be a bad thing and wouldn't be too crazy for me to see. So the last thing I wanted to talk about. Wait, what was it? I forget. That's awkward. Yeah, I don't know. Well, I forgot. Statements made about partnerships that may include financial input. Thoughts? I can't really give too many thoughts about like the statements they made. A lot of them were too vague. You know, they were talking about people potentially like renting out parts of their factory, but they didn't say who, they didn't say how much of the factory, they didn't say for how much. So like we can't really value any of that. Just expect it. You know, like if in the future, if it like pops up, you'll know like, oh, it didn't come out of nowhere. It's been premeditated. They've been talking about it for a few months with major OEMs. So I don't know. Just something to keep an eye on. Heavy shorting. So I got a question basically like, is there heavy shorting? And that's what's causing these stock. Oh, why can't I see it? I don't know. Basically, the short volume ratio and the short interest has been going up like a decent amount, but across the whole market. And I guess I can't pull it up right now. It's kind of frustrating. Short percent of float. About 28% of the float is being shorted according to shortsqueeze.com. So I mean, like, yeah, it's being shorted a lot. But it's not just like, we can't just blame the shorts for everything, right? Because like with this amount of shorting, it's not going to push the stock price below $6 per share. That wouldn't have happened. It's a lot of selling. We even saw Lordstown Motors dump like what? I don't know. It was a buttload of shares. It was 72% of their original 10%. 72% of their original 10% stake. So they literally dumped 7.2% of all the shares on the market. So, you know, it's like a lot of people have been selling. So it's not just the shorts. We can't blame them. Oh, I love you, JD Menthol. Assets. I love you. Thank you. The assets. Yes, I'm so sorry. Rebecca Roof, I believe that's her name, Becky Roof, the CFO, Chief Financial Officer, she was saying that essentially they're having a third party value their assets, which we know that they have like their massive 6.2 million square foot factory, right? We know about that. However, if you look on their balance sheet and you actually look at like their assets, here, I'll scroll down right there. They don't have $3.2 billion, right? Listed there as assets. That'd be, well, that's not right. There we go. Their total assets, it's what, 690 million right now, including their cash balance. That's more than half of that. So like if they can include more of their property, plant, and equipment, which right now is only worth this much, it's like, obviously there's some kind of discrepancy. It's like 286 million versus a $3 billion valuation. So even if you can like double that and be like, hey, yeah, it turns out the plant is at least worth 500 million, and then they can get a third party to like validate that and allow them to put it on their balance sheet, and it's not just like self-proclaimed and waved around. It would do a good amount in like bolstering their their asset like on their balance sheet. Not that wouldn't really change anything fundamentally, but from an outside perspective, if you're trying to analyze a company from like the fundamentals and the financials, and you're an outside investor potentially, like you would look at the assets to debt ratio, which right now is still zero debt, but you would look at like the assets that they have, like potentially the value that they could draw from that, and they would be able to leverage that potentially in their talks and conversations to how much they could charge for a certain amount of the factory space. And yeah, Brooklyn boy saying, you have reported in the past that all the space in the plant for other production partnerships is viable, which I agree. And yes, I had a bit of pushback, or some people saying in the comment section of that video, basically saying, hey, if they only paid 40 million for their plant, it's basically worthless. So who's going to pay them any like considerable amount of money just to rent out part of their factory? And the fact is, like, there's a 0% chance that's only worth 40 million, right? It's 6.2 million square feet with like some state-of-the-art technology in there. You have like the stamping presses that were like brand new. It's like there's literally the stamping presses themselves are worth more than 40 million. They were worth a bunch of money. I think it was like 100 million for the stamping presses they put in right before leaving GM. So if they can get a third party to like really talk about that and show like the actual valuation for it, and they can put that on their balance sheet and leverage that in their talks, like potentially get somebody to like pay them rent, I think that would be good and would allow them to do what literally CNBC, Phil LeBeau was saying on CNBC, like they have some real assets that they should leverage, but they have to move fast. And this would be it. You know, they're leveraging their assets, and if they can get like that put on their balance sheet and their financials, that would be a way of showing that. Yeah, okay. I'm going to make a bold statement about the stock price. I think the stock price will stay around $6 for a few days. I think we're done downtrending for a while, because now what is there to be afraid about? You know, like we know everything that happened in the quarter. We know their like validation and testing has been going well. We know how much cash they have. That was basically on par for what we expected. If you had half a brain and you weren't an analyst, whoops. Like we know that the retooling's going well. Everything just seems to be falling into place. Now we're really just waiting for almost 2 months, that September timeline. Let's go. Which they reaffirmed again, they're still on target, and now they have a credit line for money if they need it. And again, they can raise almost $200 million at the snap of a finger, something like that. At a snap of a hand, I don't know. Drop of a hat. There we go. So yeah, they can basically raise a bunch of money, honestly, whenever they want. Yes, they'll dilute shareholders, but only as much as 20%. So I don't know, do you want to lose 20% in the valuation of your shares, and do you want them to like have $200 million in their pocket at least, based on today's prices? Or do you want them to go bankrupt? I don't know. Kind of up to you, man. Oh, true. I guess Eric is saying maybe they pay less taxes if the plant is valued lower. I'm not, I guess I'm not too familiar with that. I think usually it's almost like square footage. I know that for like the housing prices, I don't know. I guess property taxes are weird, and it also changes from state to state. I'm personally in Washington, so like property taxes in Washington are drastically different than even Oregon. So yeah, there's that. Nice. Okay, well, overall, I think a successful, to-the-point, direct earnings call. And again, let's look at the stock price, because we've been kind of going up. Yeah, almost 7% up from our close, which we were down 4% on the day. So the stock price is still looking terrible. Let's not get that wrong. I mean, we're still, what, below $6 per share. If we crack above 7, that's when I would really expect to see some kind of recovery. But I think this stock is primed for a short squeeze now. A lot of the fear should have been squeezed out or eked out by this conference call. A lot of the things that we've been wanting to see have been answered. They've been executing, keeping their head down. Yes, the PR absolutely blows. Hire me, please. Please, I will direct your social media team. Please, come on. I want money. Now I don't know. I think they've been doing well. Honestly, that's all I have to say. I thank you so much for all you guys who tuned in. Like, this thing got a frick ton of views, 50 likes. I feel like it doesn't sound like much because you know that like Meet Kevin has like so many live streams, like 5 a day, and this man's getting like tens of thousands of freaking views. But this is amazing. Like, thank you so much, guys. And I'm just so happy that so many people are excited about this company because, like, regardless of where they go, whether they succeed or fail, it'd be awesome to see them succeed. But the story here is amazing, isn't it? I mean, like, the potential, the raw potential is quite exciting. So, yeah, I'm just excited. I think it was a good conference call, to the point, very short. It was less than 45 minutes long. So I'm going to be making a video basically recapping this, everything that I drew from this conference call. And I'll be comparing that to like past videos in the past, kind of like talking about expectations, what other news outlets, what they're going to be saying, all that stuff. So if you guys want to like tune into that, drop a subscribe. I don't know, do whatever you want. But basically, I'm going to go on because I got to work real soon. So I'm going to go to my job. And thank you so much. Holy crap, the likes just exploded. Whoa. Okay, well, thank you so much, guys, for watching. I honestly appreciate all of you for tuning in. You're the best. I love the fact that you guys are interested in this company. And just a side note, I'm kind of rambling at this point, but like, it's crazy to me that like I can go on YouTube, search Lordstown Motors, and I see my videos popping up. It's like, for a company like this and this potential, I feel like I shouldn't be the one making videos that pop up on the feed. So I don't know what's going on there. I think there's just like not enough coverage that they would allow a small channel like me to pop up, but that's it. So thank you so much. All these names in the chat, I honestly recognize most of you. You've been around for quite a while. So I appreciate all of you. And I just wanted to take a minute to really thank you for like the growth of this channel. It's been absolutely insane. We're at like what? 1,500 subscribers now? That's kind of crazy. So yeah, thank you so much. You guys are the best. I'll make some videos soon, so tune into that. And again, thank you for having me. Yeah, have a nice day. Bye, guys.